Hi guys, Max here, and this is your daily market update for yesterday, the 11th of May. And in short, it was pretty insane, but a lot of that was reserved for the crypto market and Luna, Terra, and UST in particular. So I'm going to be putting out a full video on that topic later today. And this video is just going to be covering the markets as usual. So how did it actually go in the markets then? Well, not brilliantly. Badly, yes, but not the worst that we've seen in recent memory. Big tech was down, they lost the gains that they made in the day before. Other sectors were down too, though by not as much, like real estate, financials, and consumer defensives, as you can see. Commodity-based sectors actually performed okay, like materials and energy, because, well, commodity prices are still relatively high. As a whole then, what happened with the indexes? Well, the S&P 500 fell by 1.6% for the day. As I said, not great, but not awful, not the 4% losses we've seen in recent days. The Nasdaq, though, really did perform poorly, losing 3.1% for the day, and the Russell 2000 lost 2.5%. Now, for the rest of the world, it was a similar situation for the most part. Bad, yes, but not awful. Europe and Asia wasn't exactly great, but America outside of the US, i.e. South and North America, Canada and Mexico, was actually quite solid. The MSCI World Index, being so dominated by the US markets though, fell 0.9% on the day. Now the dollar actually stayed constant for once and didn't really move much at all. It is still though incredibly strong right now. That is pretty worrying for many other countries. Bond yields actually fell a little bit further. The US 10-year Treasury yield is down 8 basis points from yesterday. It's sitting below 3% at 2.91%. I do still think it will go higher in the future. This is just some standard volatility that really we've gotten used to at this point. German and British 10-year yields fell by 2 basis points each. The German yield is at 0.99% and the British at 1.83%, so both still comparatively high in comparison to recent years. Now, oil prices rose, which does explain why energy stocks actually posted a good day. WTI crude oil was up by 5% to $105 a barrel, and Brent crude oil, as always, is sitting just a tad bit higher. Gold prices rose very slightly too, up about 0.5% for the day, and now gold is sitting at $1,850 an ounce. All in all then, markets did badly, but not awfully, just another day of fair-sized declines. On their own, these declines really wouldn't be too major or too important, but when it's like this day after day for months as it has been now, it very quickly all adds up. The S&P 500 is now down about 18% year to date, and it's about to test its 200-week moving average. If it falls below that level, there is no arguing against it. The bear market is here. You just can't deny it. I, of course, already think it is here though. Now, crypto was, of course, again, insane, as I keep saying. This video, I will just cover crypto as a whole and then talk in detail about stablecoins and the like later today. So what actually happened? As you can see, it was just red everywhere. Bitcoin was down by about 10%, Ethereum was down by about 20%, altcoins were down by 30% on average. In reality, I took this screenshot when the markets had actually recovered a bit. Bitcoin was down around $26,000 at its worst point. We've seen these huge declines actually everywhere in the crypto market because there is so much fear going around right now because of Luna and UST. And in my opinion, Luna is basically dead. It's not even worth $1 billion anymore. It reached as low as 2 cents each this morning, down from $116 each. That is an insane decline. That's losing 99.9% of your value, and that's 99% losses every day for 3 days in a row. Now, what else is there really to say? Well, hundreds of billions of dollars has been lost over a couple of days. Crypto winter is coming, in my opinion. This is the start. The bear market is here, so please be careful. Now, there was actually some big news for normal markets yesterday, and that was that CPI data came out. It was just a little bit overshadowed by this collapse in crypto. Inflation is, of course, though, still very important, so let's take a look at it and see why it was seen as good news by some people, but then the markets actually ended up negatively reacting to it, and frankly, I think it is very bad news, and the investors who thought this was good in the first place were mispricing it based on this. Now, what were the actual details for the report then? Well, year-over-year figures fell from 8.5% to 8.3%. Month-over-month figures were 0.3%, and both of those headline figures sound really quite good. But the reality is that both of them were actually far worse than expectations, and there is also the huge impact of the base effect that we need to discuss. Basically, now that we've had high inflation for a full year, inflation would have to keep doubling, spiraling into hyperinflation to see that 8% figure continue to rise. The reason year-over-year figures fell to 8.3% from 8.5% is because we're now measuring against already insanely inflated figures, so no, this is not good news at all. We call this the base effect, as in the base that we're measuring inflation from, and it's a huge impact and can't be ignored. Now, core inflation for the month was also actually 0.6%, which is huge and far, far higher than literally every single analyst expectation. There were 67 predictions made on this, and every single one underestimated how high this inflation would be, and that is, of course, very bad news. Now, because this is core inflation as well, this is sticky inflation. It's stuff that won't fall in price in the future, unlike something like used cars, which obviously will. Rent inflation also continued to rise very steadily, even according to the Bureau of Labor Statistics and the Federal Reserve's fraudulent owner's equivalent rent numbers that are intentionally delayed and low to massage their figures. Now, what this all means is that the Fed is put under even more pressure regarding tightening, because despite what headline figures say, no, inflation is not actually reducing in any meaningful way, it's staying very high. This means that more interest rate hikes are coming, and probably stronger ones as well, maybe even 75 basis points. More Fed asset sales are coming too, and that means more red days for the markets, more bad days, more bear markets, more crashes, a longer and a harder sustained bear market, and almost definitely a recession as well. Ultimately, that is why stocks ended up continuing their fall for yesterday, because the outlook, the macro outlook for the economy and for markets as a result, just got so much worse. Now, we actually got Disney earnings yesterday, which is, of course, a huge company and a new entrant to the streaming service, that industry which Netflix used to dominate. So what happened over there? Disney actually posted a decent earnings report, in my opinion. It wasn't perfect, but Disney's stock fell by 3% after hours anyway. Disney's parks revenue doubled from the year prior to $6.7 billion. Disney Plus subscriptions rose to 138 million, far higher than the expectations of 135 million. Revenue per user was up as well by 5%. Everything was actually really quite decent, but the market outlook is so bad right now that it didn't even matter, and the share price of Disney dropped anyway. The only bad bit from the report was that Disney warned Asian parks might not do so well in the near future because of the slowdown in that market, the really big thing being COVID picking back up again in China and causing major lockdowns all over the place. Now, in my opinion, Chinese lockdowns are a real problem for the macro economy, but not for Disney's parks. That is definitely a short-term problem, but apparently enough to scare off investors. Now, this sort of story actually is seen everywhere in the markets right now, especially in Nasdaq-listed tech stocks. Companies continue to grow, they post good results, and they even beat expectations, maybe turning from unprofitable to profitable, and there's a moment of euphoria before the stock just drops anyway, because there is no optimism for the economy right now, and everything is just seen as a temporary success that won't last when the recession kicks in. Now, if you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord server and exclusive content like insights into my portfolio and buy and sell alerts for all my own investments. Of course, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world-famous artists like Banksy. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets, crypto, and stocks falling every week. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get interest on your crypto, so it's earning you money while it just sits there. Thank you all for watching. Stay stoic. Until next time.